In the past, you would pay 5 or 6%, or maybe even 7 or 8%, right? So the mortgage rate was always higher than the official inflation rate. But now, possibly for the first time ever, okay, at least the first time in my lifetime, the mortgage rate is actually cheaper than the official inflation rate. I'll share with you some of the things that I've learned over the years in doing my podcast and interviewing over 6,000 experts on these various topics. One of the things we talk about a lot is the dollar, right? And whether you are in the US or in another country, every country, of course, has its currency. And the currency is the main product of any government. This is one of the reasons that I say that I would love to be wrong about Bitcoin, for example, and I would love nothing more than to see Bitcoin take over the world because it's decentralized. It's a currency of the people rather than of a government. At least that's what we think so far, and it does look that way. But I don't know that that will be a very likely outcome because governments, just like any business, they don't like competition, and their biggest product is their currency. So I don't know that they're going to readily allow another currency to displace their currency. So in our case in the US and mostly around the world, it's the dollar, the good old US dollar. And as you can see, since the Federal Reserve came along just over 100 years ago, the dollar has lost just a ton of its value. It's probably worth about 2.5 cents compared to when the Federal Reserve was founded. So the dollar has lost maybe 97.5% of its value. And this begs the question, if we denominate our lives in dollars, then we are very susceptible to the risk of inflation. Now, I've been talking about inflation for many years, but the mainstream media is finally talking about it in a real way nowadays. And we have seen just an incredible amount of inflation lately. And this is a very historic time in history, and I'll tell you why. I don't know if this has ever happened before, what is happening right now. And that is that the official inflation rate, documented by the Consumer Price Index, is actually higher today than a 30-year fixed rate mortgage. And I'm not sure that's ever happened. Now, in the past, they might have told us inflation was maybe 2 or 3%. And when you go to borrow on a mortgage, in the past, you would pay 5 or 6%, or maybe even 7 or 8%, right? So the mortgage rate was always higher than the official inflation rate. But now, possibly for the first time ever, okay, at least the first time in my lifetime, the mortgage rate is actually cheaper than the official inflation rate. Now, why do I keep saying official in front of inflation, right? That's because the official inflation rate has always been manipulated down. The Consumer Price Index is manipulated to be lower than real inflation. And there are very good reasons the government wants to do this. They have an incentive to do it because government entitlements and pay for government employees is all indexed to inflation. There is a cost of living or COLA increase, right? We all just heard about this happening with Social Security recently. And it saves the government money if they can tell everybody inflation is lower than it really is. That's a good deal for them. Also, just so people are more satisfied, so the voters are more satisfied and people can stay in, and politicians can stay in power, they want us to believe the inflation rate is lower than it really is. And so now they're telling us the inflation rate is 4 or 5%, yet at the exact same time, we can borrow money, give or take 3%. That is truly, truly amazing. But the question is, what is the real inflation rate? I say that the real inflation rate now, as we speak, is pretty easily 10 to 12%. And I'm going to get into why this is so critically important that you understand this and use this in your investments, because this can either really hurt you and make you poor, like it does for most people, or it can make you very wealthy if you use it properly. So we understand that the dollar is being debased. It has been debased historically, and the higher the inflation rate is, the less our dollars are worth. And this is also true of the yen, the euro, the peso. It doesn't matter, right? But we're mostly talking about the dollar, and since it is the reserve currency for the world, it is the most important currency. So if the dollar is going down in value, then it begs the question, how do we profit from that, right? If a stock is going down in value, we would want to short the stock. We would want to basically buy the rights to make money if the value of it goes down. And we can do that with dollars, not through the currency markets, not by being an FX trader. We can do it in a much simpler, more mainstream, more common way where we can short the dollar. Now, I want to talk to you about how I am shorting the dollar in a very effective way. It's a strategy I've been teaching for about 18 years, and it's a bit of a mouthful. I call it inflation-induced debt destruction. Say that 10 times fast. Inflation-induced debt destruction. I know it's a mouthful, but it really does explain what's going on and how you can profit extremely well from this technique. So if we look at the climate we're in right now, we have Joe Biden and Janet Yellen. Janet Yellen was our Federal Reserve Chair a few years back, and now she's the Treasury Secretary appointed by Biden. And these two are big spenders. They just want to keep spending, spending, spending. Now, we need to understand that when the government spends money, well, I should say when the government overspends money, but whenever it spends, it's always overspending pretty much, at least in all of our lifetimes. And Ronald Reagan, our past president, had a great quote about that. He used to say, you know, there's that old saying about, you spend money like a drunken sailor, right? And so Reagan said, to say that the government spends money like a drunken sailor is an insult to drunken sailors because the government spends so much more than it deserves to spend. It's absolutely crazy. And it seemed for many decades like the government could just keep getting away with this. And how do we know if they're getting away with it, if you will, getting away with it? What does that mean? Well, when the government spends more than it should be spending, which it does, it's basically overspending. It's going into debt, it's running deficits, and it's making big promises that it simply cannot keep. Now, it's not just the current budget and the current amount of debt, but that also comes in the form of another major set of promises called unfunded mandates or unfunded entitlements going into the future. And Lawrence Kutlikoff, the economist who's been on my show several times over the years, he has done maybe the biggest study on this. You know, what are the obligations of the US government over the next 10 or 15 years? And many have called that the 60 trillion, with a T, trillion, the $60 trillion time bomb. And Kutlikoff says it's more like $220 trillion. And I also want to say that that figure is actually old and out of date because that was before the pandemic. Okay, so now it's even worse. There have been more promises. And the government simply can't afford to keep these promises. There is no mathematical way it can keep the promises. So when this spending occurs and when these promises are made that cannot be mathematically kept, it creates inflationary pressure. So when we look into the future and we think, what's going to happen next, Jason? You know, what's coming at us? And, you know, there are basically three economic maladies. There's inflation, deflation, or stagflation, right? And back in February of last year, as the pandemic was just beginning, I predicted that we would come into a stagflationary environment. Now, stagflation, we know what inflation and deflation is, right? Of course, inflation is the cost of everything is rising, the cost of living is rising, because a abundant supply of dollars is chasing a limited supply of goods and services. So supply and demand kicks in, and sellers of services and goods raise prices to, keep up with demand, right? Then we know what deflation is. That just means the price of things are going down, right? And things are getting cheaper, and our savings is becoming more valuable because it's denominated in dollars. So as the savings becomes more valuable and the cost of everything else goes down, we might think that's a good thing, deflation. But actually, that is the worst thing. Any economist will tell you the scariest thing for the government or an economist is a deflationary environment. Why is that? Well, you might think, well, the price of things coming down, that's good, right? No, not necessarily. The reason is, in a deflationary environment, people want to hoard their dollars because the dollars keep becoming more valuable. In an inflationary environment, they want to spend their dollars because the dollars are becoming less valuable. So if you look at countries that have experienced massive hyperinflation, like Zimbabwe, for an example, Zimbabwe very much mismanaged their central bank, okay? We have the Federal Reserve, and Zimbabwe has a central bank too. And they overspent, and they got into trouble. And so they had massive, massive inflation. And there was a time in the early part of the last decade where the government of Zimbabwe said, look, all of the vendors are raising the prices too fast, and the citizens can't keep up with the price increases. So they passed a law, and the government said, if you sell something, if you sell bananas or, whatever you sell, you have a restaurant, you sell widgets, whatever you sell, right? Doesn't matter. You are not allowed to raise your prices without government permission. Can you imagine that? Because they were literally raising prices hourly. The inflation was so bad. They were raising prices every hour sometimes. And the government said, well, if you keep raising prices, we will arrest you and put you in jail. So what did the vendors do? They just said, well, hey, I can't afford to stay in business. So, I'm not going to be arrested. So I'm just going to stop selling. I'm going to quit, right? And there were shortages, right? So that's a very dangerous thing. But on the deflationary side, it's also dangerous because people stop spending, and then the economy just goes into this downward spiral where it loses steam because everybody's incentivized to save. So there is this sort of equilibrium. And the Fed has said, our central bank has said, their target rate of inflation in the past was 2%. They believe that that was the right amount of inflation to have. Okay, so what does all this mean to us, right? Oh, and stagflation, that just means you have inflation and high unemployment at the same time, which is somewhat rare. It happened in the 70s, and to some degree it's happening again, and I think that will be a big part of our future, unfortunately. When Jimmy Carter was president in the late 70s, they brought back an economic index to measure stagflation, and it's called the misery index, right? How bad is it? It was a very bad time where you had high inflation and high unemployment at the same time. You rarely get that, but I think we're in that environment now, and I think that's actually going to get quite a bit worse. Okay, so what do we do? Well, actually, more accurately, the question is, what does the government do about this? What are their choices, right? If we put ourselves in the shoes of the government and the central bank, what are they going to do? What are they likely to do, right? Well, I've identified 6 things that they're likely to do. One possibility, when they're looking at what are our options in this tough environment we're in, what can we do? Well, one thing we could do is we could just default. We could say, look, sorry, I know we made a lot of promises, but we've overspent. We're broke. We can't afford to keep our promises. Tough luck. So we're going to have to cancel Social Security. We're going to cancel government healthcare benefits of whatever kind they have going at the time. They're going to fire or lay off a bunch of government employees. They're going to cut services. And they're just going to say, sorry, we can't keep up. They're going to default on their debt that they owe to foreign countries. which they haven't done before. And this is a very unlikely thing to happen. The reason is because it's politically unpalatable. You saw what happened in Europe, especially Greece, when they instituted what? Austerity measures, right? They had to cut back. And there were riots in the streets. They were burning Greece down. I mean, you saw the videos probably from Athens maybe 10 years ago, give or take. Similar things have happened in France, Spain, Portugal, Italy. It's happening all around the world because every government is pretty much engaged in this race to the bottom to devalue its currency through inflation. And it's a very dangerous thing. Okay, could the government raise taxes? Look, we've overspent. We're just going to raise taxes to pay for our spending. Well, I hate to break it to you, but that is mathematically impossible. It can't be done. The GDP of the United States, meaning the entire value of the economy in a single year, is a little over $20 trillion. If we owe, and on the old number, $220 trillion in these unfunded mandates and entitlements coming at us, we would have to tax everybody at 100%. Can you imagine a 100% tax? Meaning that all the value you create, everything you work for, you have to give it all to the government, and you have nothing to live on, right? That's not going to work, obviously. And if we taxed everybody at 100%, the entire value of the economy would become a tax. It would take 11 years to pay for the things we've already promised if we promise nothing more after today, right? So that's not going to work. You can't raise taxes enough. And if you did, everybody would just quit and stop working, right? Okay, that's not going to work. Well, we could have a yard sale. We could have a big garage sale, and we could sell off the assets of the country to other countries or other companies. Years ago, we talked about selling the ports to Dubai. You might remember that. It was all over the news. It didn't happen, but it was a discussion. The Bureau of Land Management sells off land to real estate developers and so forth. So the government does raise some money occasionally from selling off its assets, right? So that's a possibility. We could steal assets from other countries, right? We could use our military, which is pretty much the history of the world. I know this sounds evil and terrible, but it's the way the whole map of the world was drawn pretty much, okay, is by one country taking the assets of another country by using its military to do it, okay? It happens, okay? I'm not saying it's good, it's not fair, but it's just part of the world history, right? On the good side, we could have technological innovation. The debate between inflation and deflation is basically like a boxing match, okay? Think of it like this. You hear the announcer at this boxing match, and the announcer says, over in this corner, we have bad fiscal and monetary policy. We have government spending. We have government debt over in that corner. And going against them, over in this other corner, we have technology. And technology is deflationary because technology makes life better and cheaper and faster and more efficient, right? That's what technology does. And so technology is deflationary pressure, and bad fiscal and monetary policy in the other corner is inflationary pressure. So the question is, who will win this boxing match? Will it be bad fiscal and monetary policy causing inflation, or technological innovation causing deflation, right? This phone that's in my hand costs $1,500. And I'll tell you, it's a lot better than the first phone I ever owned that weighed 14 pounds and cost $3,200. So that's technology, right? It makes life better, cheaper, and this phone does way more than that other phone, right? That other phone was simply for calling. It didn't even do texting, if you can imagine that, much less anything else, right? So this is hopeful, right? But in that debate about who will win, technology still has its limits. It improves quickly, but it is limited by basically an evolutionary process, right? Because one discovery leads to another discovery or another creation, and we keep refining and making things better. That's progress. That's great. But bad fiscal and monetary policy is truly unlimited because there's no limit whatsoever to the amount of fake money they can create out of thin air to cause inflation. And they want to cause inflation because inflation is a great business plan for the government. And that is the last point. The most likely way they will get out of the mess they're in is to simply continue to inflate the value of the currency, which means the currency, it's kind of opposite. When I say inflate, it really means deflate, because the value gets lower through inflation. Prices inflate, but the currency deflates, if you want to look at it that way. And think about it this way. All of those promises the government has made and all of the debts it owes to foreign countries will actually go down in value if they continue to inflate the currency. Because think about it. If the government owes $1 trillion to China, for example, and the inflation rate is 10%, doesn't matter if the 10% happens in a year or 2 years or 3 years, just say 10% happens, then the government basically got a $100 billion discount on the debt it owes to China. So the government wants inflation. It benefits them. And if you are a real estate investor, you want inflation too. Not for the reasons that most people think. The amateur opinion of this, the amateur observation here that you've heard throughout your life and you're already thinking of is, well, real estate is a good hedge against inflation because it's a commodity, right? Or it's what I call packaged commodities. And those will hedge inflation because they'll keep pace with inflation or maybe even do better than inflation. They might even outperform it. But that's the kindergarten level.